Etsy is one growth stock down 63.5% that I think you might regret not buying on this dip. I'm going to explain why I think that's the case in this video. So let's begin. First thing I'll highlight about Etsy is the phenomenal revenue growth. You look at revenue growth in two parts here. One is before the outbreak and one is after COVID-19. Even before COVID-19, Etsy was experiencing very nice revenue growth, upward trajectory going back all the way to 2014. But then, right at the onset of the pandemic, revenue exploded, nearly tripling in 2 years. And the good news is that Etsy has retained much of that growth that it experienced during that time. Now, I know some of that is due to acquisitions and all of that, but to simplify things, let's just look at it in combination. It has retained and sustained this revenue that it gained during the pandemic, and that makes sense, right? It attracted millions of new customers and millions of new sellers during the pandemic. Of course, not all of those buyers are going to stick around, but some of those buyers will find that, oh, I like this website, I'm going to stick around. And then it also attracted millions of new sellers or many new sellers. And some of them are going to say, oh, I like this platform, I'm going to stick around. So it was a way for Etsy to attract millions of new customers with little advertising or customer acquisition costs needed because people were actively looking for places to shop online in a stark contrast from normal behavior, right? In normal conditions, people are not actively, urgently looking for websites to spend money on. That was really different during the pandemic when there was relatively fewer places where people could spend their money and they were looking, really searching online for places to spend their money. And so that helped Etsy tremendously, and they've benefited and sustained that momentum even as economies have reopened. Here's another thing I love about Etsy stock is the profitability. Look at the profit expansion going from roughly negative 5% operating profit margins in 2015 and growing nicely even before the outbreak, but then during COVID 19, absolutely exploding from 10% to over 20%, near 25% operating profit margin. That has normalized a bit, but still higher than before the outbreak at 15.06%. Now, the profit margin of Etsy is a result of the foundational business model, the asset light business model. I've been saying this a lot on my channel. I like businesses that operate under these asset light business models, and Etsy is one of those businesses. It's a platform that brings together buyers and sellers. Etsy doesn't own any of the inventory on the platform. It just brings buyers and sellers together, and it takes a transaction fee for each sale on the website, close to 20% of each sale on the platform. So a $100 sale will result in $20 in revenue for Etsy, and that's a very high margin $20 in revenue because there is no cost of goods sold associated with that $20. When a retailer like Macy's, for example, sells something for $20, that's not a very high margin sale because there's a cost of goods sold associated with that, right? It sold a t-shirt, a necklace, or whatever it might be that Macy's had to pay for. So out of the $20, maybe 8 or 7 or so will be the gross profit margin. For Etsy, the $20 in revenue is nearly all profit margin, right? Because it has very little cost of goods sold, right? It's, some costs to maintain the platform, maintenance, some cloud computing costs, transaction costs, the minor things, right? Nothing significant like the actual item. So that leads to these very robust and very healthy operating profit margins that you see from Etsy, but you also see from its competitors, right? So Etsy is not the only one. If you take a look at eBay, eBay also operates under very healthy operating profit margins, and it's been doing so for roughly 2 decades. So it's not like Etsy is unique in this nature. So as an investor, you don't have to worry about, oh, is this sustainable? Can this sustain long term? You already have a case where it has sustained long term for nearly 2 decades, the example with eBay. So for that reason, I really like this business model. I really like the way Etsy is employing this business model, and it's resulting in excellent operating profit margins. And this next thing, in resulting in very good cash flow from operations. You look at Etsy's cash flow from operations over the trailing 12 months. Look at this explosive growth from near zero, climbing all the way up to 683 million in cash flow from operations for Etsy in the trailing 12 months. And again, this is a result of the business model. Etsy doesn't need to invest in inventory. Etsy doesn't need to invest in shipping and handling, logistics, warehouses, planes, vans, things like that. And Etsy doesn't need to invest in brick and mortar stores, maintenance, operations, and all of that. So that frees up a lot of cash when Etsy does gain revenue, gain customers. A lot of that flows into cash flow. A lot of that flows into profits. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason I will highlight for not missing out on this buying opportunity for Etsy stock is the attractive valuation. Etsy is trading at a forward price to earnings ratio of 23.12, near the lowest it has been going back 2.25 years, according to this metric. And so you have rarely had an opportunity to buy Etsy stock at this valuation. Now, the reason why this has come up is because the broad market sell-off in growth stocks that brought Etsy stock down, and the worry about Etsy's business as economies reopen. Of course, it's going to be a headwind to Etsy in the near term. So those two forces have brought Etsy stock down, like we talked about in the video earlier, 63.5% off its high. In my opinion, that's been an overreaction. In my opinion, that's a buying opportunity. And for that reason, and the ones that I mentioned in this video, I think you might regret not buying Etsy stock on this dip. All right, so that's all I've got for this video. Thank you so much for watching. I've picked some videos that I think you'll enjoy that are popping up on your screen. Please click on one of those, and I'll see you over there.